Welcome back. Today we're diving deep into a company that, well, really needs no introduction in many ways. Tesla.
Hmm.
We've gathered quite a bit of research, a stack of reports really, focusing not so much on the amazing history, but on what our sources are calling a major, maybe critical inflection point happening right now.
That's right. And our goal today, our mission, if you like, is to give you, the listener, a clear look at the mix of challenges piling up.
Yeah.
We're talking legal problems, real brand damage, and this fundamental question about what Tesla is now. Is it still primarily that EV pioneer, or is it shifting into something else, like a more speculative tech investment? Understanding that is key.
And we should definitely start by acknowledging the reality. The sources confirm this. Tesla's early days were a massive business success. No question.
Absolutely.
Launching the Roadster, they didn't just make a car. They basically re-energized a stale, apathetic, and hardly growing EV industry.
Yeah.
They really forced the old guard to react.
That history is crucial context. But wow, this story has shifted. A key theme, a consensus really, across the material we looked at, is that the brand image,
Which was almost untouchable for a while.
pristine, yeah, invincible, maybe. That image has taken some real hits over the past year or so. And that damage, is causing real anxiety among investors. The magic might be fading a bit.
Okay, so let's unpack some of those immediate corporate uh, commercial problems the sources list.
Yeah,
Because it feels like they're getting hit from multiple angles at once.
it does.
The reports show pretty clear evidence of consumer backlash. And often that's tied directly to, well, political controversy around leadership. That's kind of a new vulnerability for a car maker, isn't it?
It is. And it's not just external perception. Internally, the sources point to a high-level talent exodus,
That's never good.
especially for a company built on innovation, on software. Losing key people there, that's a definite red flag.
And then there are the core product issues being cited. We're seeing reports about declining vehicle dependability.
Right? Reliability concerns.
And maybe the biggest commercial hit right now, the research actually calls the Cybertruck failing commercially.
Yeah. That phrase, failing commercially, that lands hard, especially when you link it back to how the auto industry works, the cost structures.
Okay.
A high-profile vehicle like Cybertruck struggling, combined with the fact that existing factories have unfilled production capacity. That's like financial quicksand.
Talk a bit more about that, the unfilled capacity. Why is that so damaging in the car world?
Well, it really boils down to fixed costs. Building a gigafactory involves huge upfront and ongoing expenses. The land, the robots, the utilities, the workforce, it's massive overhead.
Right.
So if that factory is designed to churn out, say, 500,000 cars a year, but you're only selling 300,000, those fixed costs don't shrink.
They just get spread over fewer cars.
Exactly, which hikes up the cost per vehicle for every single one you do sell. It crushes your margins and makes any sales slow down. Or commercial failure, like the Cybertruck might be, much, much more painful financially.
Okay, that really paints a picture of the financial pressure.
Yeah.
Which kind of leads us to where the problems start costing potentially billions. The legal challenges around full self-driving. This is where it gets really complex.
Yeah, the legal stuff is a whole other layer, and the foundation for this mess, it goes back to that big promise in 2016.
Right, the claim that all cars made from then on had all the hardware for full self-driving.
And crucially, the fine print, define that as level 4 or level 5 autonomy, fully autonomous driving.
Maybe just quickly clarify level 4 and 5 for listeners who aren't deep in the weeds on that.
Sure. So level 2, that's what most advanced systems are today.
Yeah.
Driver assistance, you need to pay attention, hands on the wheel ideally.
Yeah.
Level 4 means the car drives itself completely under certain conditions, like within a specific city area, no driver needed in those conditions. Level 5 is the dream, drives anywhere, anytime, total autonomy. The driver's just a passenger.
And the research highlights this huge gap between that level 45 promise and what the hardware, the actual computer in the cars, could deliver.
Precisely. The sources cite the CEO himself admitting that the current main computer in many of those cars, Hardware 3 or HW3, well, it's actually incapable of unsupervised self-driving.
Whoa.
That admission just pulls the rug out from under the original promise made to potentially hundreds of thousands of customers.
And the fallout from that is really driving these lawsuits now. There was supposed to be a fix, right? A retrofit with new hardware.
Yes, a commitment was made to upgrade vehicles with capable hardware. But the sources we looked at suggest owners are allegedly waiting, maybe 10 months, maybe more, with no clear timeline, no word on an upgrade, not even a software update to significantly bridge the gap for HW3.
And that failure, that lack of a fix, is what's fueling these class action lawsuits.
It gives them serious teeth. And it's not just a U.S. issue. This is global.
Right.
We're talking thousands of owners reportedly joining a class action in Australia over these claims about FSD capability.
Yeah.
And then just last month, a similar big lawsuit kicked off in China.
And here in the U.S., a judge recently refused Tesla's bid to dismiss a major class action over HW3, right? Allowing it to proceed. So the legal walls seem to be closing in a bit there.
It certainly looks like the legal team is facing an uphill battle trying to contain this. And beyond just the sheer number of lawsuits, you have these huge verdicts from fatal accidents. These aren't theoretical risks anymore.
No, these are actual financial hits.
Massive ones. And they set worrying precedents legally, plus the reputational cost. It's immense.
What were the specific numbers on those verdicts?
Well, there was a huge $329 million verdict out of Miami. That related to a fatal crash back in 2019 where the FSD system's role was key.
Okay, $329 million.
And then not long after, another one in Florida, $243 million awarded to a family in another fatal crash case.
Yeah.
The sheer size of these verdicts, tied directly to autonomy claims in the auto industry, is pretty unusual and signals just how serious the legal risk is becoming.
So if we link these massive potential damages financially to the company's other decisions, it kind of brings us to the whole advertising and optics issue.
Yeah, that's another strange turn.
Because for years, the context was simple. Elon Musk famously hated advertising.
Right.
Said he hated it, the money should go into the product.
Right. That strong stance against ads made the recent change really stand out. Because Tesla has started advertising recently.
But not for the cars.
Exactly. Not to boost sales, not to maybe counter the dependability concerns or, try to salvage the Cybertruck launch. Things you'd normally expect ad money to go towards in a slowdown.
Instead,
Yeah.
the TV ads, the streaming ads, they're promoting a shareholder vote.
Yeah, specifically promoting a vote to approve the CEO's next compensation package, which is valued potentially up to an almost unbelievable $1 trillion.
$1 trillion.
This is where the optics just look.
Well, really bad for some observers. You've got factories with idle capacity, meaning you desperately need more sales, more vehicle marketing.
Right.
But the ad budget seems to be going towards convincing shareholders to approve the biggest pay package in, well, possibly history.
One of the sources put this in perspective, comparing it to Alan Mulally at Ford. Yeah, that was a useful comparison. The author had previously supported a big package for Mulally, the CEO who turned Ford around.
Because it was seen as a proper incentive tied to actually saving the company.
Precisely. Mulally got paid very well, but it was for delivering tangible results, a massive turnaround, huge shareholder value, this potential $1 trillion package. The source described it as just being on another level entirely. The scale itself changes the conversation about executive pay, especially when, sales are looking sluggish and these legal clouds are gathering.
So let's try to connect all these dots, the legal storm, the commercial issues, these distracting optics. It all leads back to the big question for investors, is it time to sell?
Well, the consensus in the materials we reviewed seems to be that this combination of headwinds, plus the fact that EV adoption in the U.S. is maybe slower than hoped, it likely means a rough few quarters, perhaps even longer for the company.
So from a pure car company perspective, it looks tough.
Yeah, an analysis focused just on the auto business would probably raise some serious concerns right now.
But, and this is the huge but, there's this massive potential upside that complicates everything.
Right?
The company's pushing hard into these other potentially huge blossoming industries. AI, robotaxis, robotics.
And the research is clear. That pivot, that expansion, it's likely going to be a long road, expensive, definitely an uphill battle in many ways, but that's the grand vision being sold.
Which brings up maybe the most important question for anyone holding the stock or thinking about it.
What did you originally invest in?
Exactly. That distinction is critical now.
Yeah. Did you buy the electric vehicle icon? Were you betting on Tesla dominating transportation, selling millions and millions of cars? Because if so, what you might actually own today is shares in something evolving into a largely technology-based company and investment. One where the focus might be more on AI platforms, robotics, with the car division being maybe more of a way to gather data and fund those ambitions.
And that's a fundamentally different bet. Different risks, different timeline for payoff.
Absolutely. So the sources argue, pretty compellingly, I think, that all this current adversity, It's a really good reason to go back to your original investment thesis.
Reevaluate.
Reevaluate completely. Did you sign up for a struggling EV maker or for a long shot, potentially massive tech play where the car part is just one piece? Because Tesla is clearly at an inflection point. The investment today is not the same as it was even 5, let alone 10 or 15 years ago.
Okay, so we've covered a lot of ground here. The critical, immediate challenges, those huge legal verdicts, the global lawsuits, the curious advertising choices.
Yeah.
It really defines this moment for Tesla. You should now have a pretty clear picture of what's driving the current market unease.
Which leaves us with the final, maybe the ultimate strategic thought for you to chew on as you look forward. The sources really emphasize this. The core battle right now isn't just about selling cars. They're clearly facing challenges there. The real question is whether the market, and maybe more importantly, whether you as a current or potential investor fully buys into Tesla's evolving vision. This vision of a sprawling tech giant centered on AI, robotics, autonomy. Even if the car business itself stays under pressure for a while. That acceptance or rejection of the new vision, that's the real test for Tesla's future valuation.